what is the threat of a main monetary meltdown and recession in international markets earlier than the stop of 2024. Hello and welcome to my channel. An economic disaster reasons so an awful lot of harm due to the fact human beings matter to economic establishments each day. Banks grant debit playing cards to make it less complicated to pay for things. Pension carriers aid us in planning for the future. And insurance plan groups grant insurance if our assets are damaged, lost, or stolen. Before we go any further, please subscribe to our channel and click on the notification bell to acquire updates on future movies like this. So, in addition to ado, let us talk about the impending new and horrific monetary crisis. When a disaster strikes, the aftereffects would possibly close for years. Based on historic instances, one estimate places the whole financial fee of a common monetary disaster at roughly 75% of GDP. That equates to PS 21,000 for every man or woman in the United Kingdom. Red flashing warning lights. The lengthy bull market that started in 2009 has now grown into a full-fledged epic bubble. Extreme overvaluation, explosive fee increases, frenetic issuance, and wildly speculative funding conduct in the United States and Europe. The wealthiest 1% recovered pre-crisis wealth degrees in a be counted of years, whereas the lowest 1/2 of the wealth distribution in the West took a long way longer, about 2017, to attain pre-crisis wealth levels. Many retail investors who have been capable to work from domestic except main loss of profits throughout the COVID pandemic, however, have been restrained in their regular spending, are now pouring into famous equities, rising share values of even unprofitable agencies, flying like 4th of July skyrockets. The international fairness market capitalization as a proportion of international GDP extended from 320% at the opening of 2019 to 357% at the stop of 2020. This enlargement of over 40 proportion factors in solely 2 years is extraordinarily fast, when in contrast to the amplification of solely 20 share factors from 2013 to 2019, from 310% in 2013 to 320% in 2019. Global debt has additionally skyrocketed. World debt will attain a new excessive of $281 trillion in 2020, with public spending on the COVID epidemic including just $24 trillion to that total. 1 million seconds is equal to 11 days. 1 billion seconds is equal to 32 years, and 1 trillion seconds is equal to 32,000 years. The large photo is exemplified by way of Wall Street margin debt. Brokers supply investors with margin debt for them to play economic assets. It peaked at $400 billion simply earlier than the 2008 economic meltdown. It had hit $480 billion earlier, in April 2020. Then, in the 12 months to March 2021, even after the Archegos catastrophe, it almost doubled to $820 billion. Is this irrational excitement? Because of rising asset fees and extraordinarily low interest rates, it is logical and safe. And in contrast to in the run-up to the NAV, they declare that banks are no longer overstressed, having been compelled to extend their capital base in view that the crisis. Will asset costs proceed to upward thrust whilst activity fees continue to be low? The answer is decided by using inflation. If inflation continues low and the Federal Reserve continues economic stimulus, asset costs will proceed to rise, growing the chance of a crash. If and when there is an enormous expansion in inflation and a belated tightening of financial policy, a monetary catastrophe and deep recession are on the horizon. We love your enthusiasm, so do not overlook to subscribe to the channel and click on the notification bell to be notified of new videos and preserve watching. Where will the monetary disaster come from? History teaches us that there are several reasons for crises, some greater abnormal than others. In the Netherlands, for example, the tulip craze swept us of in 1636. As the fee for tulip bulbs rose, it is mentioned that some used their lifestyle's financial savings to buy them. However, the tulip fever got here to a surprising end, and the fee of tulips plummeted, ensuing in big losses and a hunch of the Dutch economy. Nobody is aware of what will reason the subsequent crisis, but we do comprehend that the subsequent disaster will be exceptional from preceding ones. Records may additionally rhyme, however, it not often repeats itself. 3 monetary crises in the 21st century. 2001–2002 Argentine economic crisis. Since the terrific monetary panic of 1876, Argentina has been plagued by using crises. From 2001 to 2002, the United States underwent its first disaster of the 21st century, which blanketed a foreign money disaster as properly as an economic panic. The Argentine peso is in shambles as an end result of a failed tough forex peg to the US dollar. When the Argentine authorities flirted with a savings freeze, financial institution depositors panicked, forcing activity prices to skyrocket on how to develop a small budget. With this, we conclude the contemporary video. If you observed this video helpful, please do not forget to smash that like button and subscribe to our channel earlier than you leave. Thanks for watching, guys. We'll see you at the subsequent one.